YouTube? Welcome back to my channel. So today I'm going to be talking to you guys about Johnson & Johnson. So I'm actually doing some option calls for Johnson & Johnson. What I'm going to be talking to you guys about is why I believe Johnson & Johnson it's a good time to buy options. I will be comparing them to Pfizer and Pfizer's history. I'll also be showing you guys what other analysts have guessed the target price would be for Johnson & Johnson, as well as some news and the two call options that I would purchase as of right now, and what prices you should take out your profits. So I have done a video on IPOC, and if you've purchased IPOC when I made the video, you're up big. I've recently made a video on GHIV, and that has gone up. There's still a lot of room to grow, and there's definitely going to be a lot of dips that you could definitely get into and grow out your positions. But enough of that. If you could please like and subscribe, and leave a comment if you want me to do a video on a particular stock. So it doesn't matter, any stock of your choice, and I'll definitely make out a video for you guys. So as of right now, I'm going to be doing Johnson & Johnson. I'm going to be buying some option calls for it. The price is currently trading at 153. So I've gotten the Johnson & Johnson calls earlier at about 150, about 151. I didn't get at the very bottom. But I ended up buying around right here yesterday after the market has dipped. I also bought some more before that at 152-ish. So I bought here. I made some pretty good money here, but I didn't end up selling. And when the S&P took a hit yesterday, I purchased some more on the dip, and as it started correcting itself, I'm up about 30% on my option call right now, for at least the ones that I purchased yesterday. So in regards to Johnson & Johnson, the current price is 153. The high is 157, and that high was about in April. It hit 157. I do believe that the Johnson & Johnson will make a new all-time high, and if you look here, there's analysts that have mentioned their price targets. So all these analysts have assumed, so from Citigroup 178, Morgan Stanley 178, so they had a price target of 180, Wells Fargo 172. So as you can see right here, everyone believes that the stock would definitely make new all-time highs, and you could definitely check this on your broker's research page. So what I'm going to be talking to you guys about is in regards to Pfizer. So if you guys don't know this, Pfizer has released their vaccines. I'm pretty sure everyone knows this, but the only downside to their vaccines is it's a two-shot vaccine, meaning that you take one vaccine and then you got to come back and take a second vaccine in order for the dose to work. If you only take the first one and don't come back for the second, there's less than a 30% chance that your first vaccine would even work. So it's a two-shot vaccine, and it has to stay in a temperature of in the negative degrees. It has to be really cold in order for the vaccines to work, and if it stays in room temperature or isn't frozen, then the vaccine's percentage of it actually working goes down. So if you guys don't know, this was when they had their trials and they said that it was successful, and what happened, the stock went up until they released it out to the public. So it went up about 27%, and this was when as you can see, like their highs were like in the 137s. You see they're like about the 137s, 138 prior to the vaccines, and it broke a new high at 43.08. So it shot up about 25% since the vaccine. And what you want to do with these type of plays, you want to purchase on rumors and you want to sell on the official news when it comes out. So right now the rumors are that Johnson and Johnson, well, they're not officially rumors because we all know that Johnson and Johnson are making their vaccines and they're planning on releasing them. But what you want to do is you want to purchase them now. Once they get released, you want to sell. You could still hold a little risk factor to it in case something goes wrong with the vaccines, etc. So in order to avoid all of that, you'd want to probably just sell, make your gains, whether you multiply your money by 3, 4, 5, 6 times your money on these plays, and go from there. So in regards to Johnson & Johnson, like I mentioned, it offers single shot vaccines. This is on NBC Boston. They've made an article on that, and as well as CNBC. So they're currently on their phase 3. They're trying out their vaccines on 45,000 people, and what they plan on doing is after they collect the data, they want to be, as of January, they want to be able to go ahead to the submit an emergency form in order to be able to give out the vaccines and speed up the process and get the vaccines out by early February. So once they do get approved, once they do pass the trial and they announce the news that yes, the vaccine does work and it's successful, then what's going to happen is that the price is going to skyrocket just off of that news. So you want to go ahead and buy now, sell on the news. In regards to that, I'm going to give you guys 2 different option calls that I'm purchasing. So you could go on the options profit calculator if you want to calculate your profits. You select your option. You go ahead, and I'm trading the 22nd of January because I feel like the news will come out, like I said before, the end of January is what they're targeting. They're targeting for mid to early January, depending on how successful the trial is, but they want to be able to submit it by about mid-January, so then they can release the vaccines early, first week of Feb. So they can't be announcing it end of January because they need to announce it around mid to early Jan in order to be able to get their vaccines out to the public by February. So I am going to be doing, you could either do a 160 call or you could do a 170 call. These are my 2 favorite ones as of right now that seem to be the cheapest. So for this one, I'm going to be doing the 160 call. If you could try purchasing them for about $2, a little bit under $2, wait for some dips if you can get into some dips. If not, $2, $2.05 is a decent price to get at. I would try to get under $2.20 would be actually really good. Let's say, because it's kind of speculative, we don't want to be throwing in thousands and thousands of dollars. Let's say I want to just risk $1,000. So I'm going to buy 5 contracts. And before I actually get into that, I would actually want to give you guys some technical analysis on this. So as you can see right here, the support, let me get a closer look. Okay, so as you can see, the resistance is about 155 is the high end resistance, and there's another resistance about 153, 154-ish. So that means that it would need to break that 153.26.34 level in order to hit the new resistance of 155. If it could break that 155 resistance, it will shoot up to 160, 170, etc. In regards to the support, so the support right now that we have, as you can see, would be about about 150, 149 would be the support. As you can see, it did bounce and it bounced back up at the 149, 150, and as you can see right here, it was a resistance before. So if it's a resistance before and it becomes a new support, that's how you know that this would be the next resistance. So that means that you want to make your stop loss for anything about 149. In case it goes to 149 and bounces right back up, you probably want to put your stop loss about 148. If you don't put a stop loss at 148, and let's say the stock decides to go down, what's going to happen is if it breaks that support, it could literally shoot up all the way down to the next support level, which is 142. So there's a huge gap in terms of support levels. So at 142, and then at 142, the next support would probably be about 137. So you don't want to end up buying options and your stock going that low. So that's why you'd want to put a stop loss at about 147, 148. And as you can see here, in terms of short term, you could scroll down. They recommend that you put a stop loss at 148. So I would probably say put a stop loss at 147 in case it shoots down to 148 and goes right back up. But right here, they tell you the support is 149 and resistance is 153.65. And there's 8 analysts that are bullish and 2 that are bearish, so it's an 8-to-2 ratio. It's pretty good. As long as you do maintain your stop losses, then you're okay. So in regards to the graphs, I'm going to put a 148 stop loss and a 180 in terms of the profits. So when you calculate that, right here, let's say they announce it on the 9th. If it makes, on the 9th, if it hits $160, you already make a 60% gain. Most analysts were assuming it's going to be anywhere between 170 to 175, so you could 5 times your money right here, and you could 7.38 times your money if you do sell with the 160 call option. And in terms of your stop loss, you would lose about 50% of your money. So you're losing about 50% of your money in order to make 6, 7, 8 times your money. Whereas here I did the 170 call option at 85 cents. I purchased 12 of them in same graph range, so 148 to 180. Once it hits 180, take your profit. Don't be too greedy on it. But let's see, same thing on the 9th. If it hits that 160 mark, you're making about 8.24%. It would definitely hit that mark. If it hits the 170 mark, you're 4.66 times your money. That $1,000 turns into $3,732 dollars. Sorry, so you'd get triple the profits. And if it does end up hitting like what most of the analysts say by 175, you'll end up getting your 1,000 will turn into $7,380. So as you can see, these are the options I'm purchasing, and I don't plan on letting them expire, because the closer you are to expiry date, the more chances you have of losing. I'm going to be trying to sell them as early as January, and whatever that percentage it gives me, whether I get 78% return or I get a 1,179, as soon as that news announces and it has a huge spike, I'm going to be selling, because I don't want to be staying in this too long. If you do guys have any questions, please let me know. Like and subscribe if this helped you, and check out my other videos.